Hello everyone and welcome to the latest US environmental insurance power panel here at Insurance Business TV. Now in this edition we welcome back our experts to discuss claims trends, carrier disputes, coverage levels and more. This time we welcome Cameron Douglas, Regional Director Environmental Practice at Gallagher, Ed Morales, Senior Broker Environmental Practice West at WTW, and Kate Dietrich, VP and Senior Environmental Specialist at Lockton. So welcome everyone, and let's start by looking at claims trends. Are you noticing any claims trends that may be different in 2025 compared to prior years, Cameron?
Thanks, Paul. So many environmental claims are long-term in nature, and they take years to develop and even be realized. And with the past decade plus of financial activity, it's made that problem even more pronounced. We've seen a significant increase in real estate transactions over the past 10 to 12 years, given lower basically interest rates. And with that, many have seen private equity firms and real estate investment trusts and acquiring companies take advantage of cheap financing to acquire commercial and industrial properties. Some of these properties have legacy environmental exposures that may be perceived as low risk at the time. But what we've seen is that many of those exposures are now leading to environmental losses, whether resulting in cleanup costs or even bodily injury and property damage. And that's especially true as oversight and regulation matures. And so that just simply highlights the importance of considering pollution liability insurance when acquiring real estate, whether it's commercial, industrial, whether the perception of environmental risk is low or high.
Yeah, and real estate, obviously a great place to start, Kate, but I imagine when we're comparing 2025 to 2024, those wildfires in California have to have an impact, don't they?
Yeah, I think that's one thing we've seen develop in 2025, and just a continuation of what's developed in years prior is the effect of natural catastrophes on properties, creating contamination. So the LA wildfires, I know it was all over the news about some of the contamination that had just been spread. It might not be the property someone owns that caused the contamination that's on that property. It was spread in the course of those wildfires. And so, the cleanup and the remediation that property owner has to perform, that's something new that we're seeing. And then, of course, floods, things like that cause, same thing, just widespread contamination of a property leading to things like mold and mold remediation that has to happen.
I don't know whether it's a difference from one year to the next or not, Ed, but I mean, when we're talking about claims trends, we have to bring up PFAS, don't we?
Absolutely. I think we'll continue to see that as with the emergent contaminants like PFAS and others. And interestingly enough, there could be more of a trend of seeing class action suits and with regards to these chemicals. And so obviously that would be pointed at the makers and users of PFAS products and materials. So that'll be interesting to see how that continues in the coming year.
And Ed, are you encountering any coverage issues with your insureds? Any areas that you think may be being consistently overlooked?
Well, it's always good to take a hard look at the policy language, look at the fine print, if you will, and to make sure you understand what's being covered and what potentially may not be covered. And as I wanted to mention, one particular example would be the concept of restoration costs, which are typically cited in the policies that we work with as covered as part of remediation, but really understand what that means with regards to what would be restoration cost and what wouldn't, what you think might be covered may not be covered at all, and understand also the claims process from on the carrier side and what they interpret might be different than how we look at the policy language. So it's something to really be careful about to ensure that you understand, again, what's being covered and what isn't.
Yeah, that issue around the fine print, Cameron, is really important, isn't it? Because a lot of clients, I'm guessing, don't necessarily understand the impact of pollution exclusions in particular.
We're hearing more and more about insureds questioning the pollution exclusions on their general liability policies, for instance. In some cases, PFAS even instigates that investigation of, hey, to what extent is pollution even covered under GL? And in many cases, insureds realize that the extent of coverage is minimal, if not null. So it's important to understand these pollution exclusions exist on standard standalone GL, ISO policies, and that there are combined general liability, pollution liability programs available to address these exclusions, whether it be a site pollution, related risk, or I think more importantly for many of our manufacturers, distributors, products pollution related exclusionary language that would be covered again on these combined programs. In many cases, our environmental casualty carriers who write these combined programs can compete and beat standard casualty carrier pricing. So having your broker explore these combined programs to assist with filling in the gap of a pollution exclusion is really important, especially when considering how broad the definition of pollutant can be on these policies and on these pollution exclusions. There are many scenarios in which a pollution-related loss can be excluded given the gray area of what would be defined as a pollutant or not. So certainly very important to consider.
It's a big question, Kate, but if you don't mind, have you ever faced any disputes with carriers? And indeed, if so, how did you overcome them? Or are there any steps that can be taken to minimize those disputes in general?
Yeah, I think the one that we commonly run up against and we've dealt with is late reporting of claims. So environmental insurance policies are claims-made policies. So it's important that you get the claim in during the policy period and prior to the end of the policy period. But there's also wording in there that says it has to be reported as soon as practicable or as soon as possible. And so there is an onus upon the insured to understand that language, identify when a claim or an incident happens, and in a timely way, get that notice or that claim reported into the insurer. And so if that does not happen, then the insurer does have grounds on which they could potentially deny a claim that might have otherwise been covered if not for the timely reporting. And so, when that happens, I think our role as broker, our role as their claim advocate with that policy is to advocate on their behalf. And I think that's where our relationships with those insurers come in. These are our business partners that we have broader relationships with and have fostered those relationships with the leaders of those claims departments within each carrier. And that's where we sort of bring the right people to the table, talk about maybe where things went sideways, and try to have the conversation that this didn't prejudice the claim or their them coming to the table late did not prejudice the overall size of the claim or nature of the claim, and see if we can just sort of right the ship. And so that's where we really lean on that relationship and bring that to bear in those conversations so that as a business partner, we hope that they do the right thing. We can advocate for the clients and sort of get things back on track in the right way. I think the other part of that too is just setting expectations up front with the client. Making sure that they have things in place on their end that set them up for success in the event of a claim. And so if something happens within that organization, it gets escalated quickly to the right person so they can get that timely notice into the carrier.
Lateness can clearly be an issue. And Ed, I imagine there can be issues as well if something's been missed.
Absolutely. And the example I wanted to discuss would be in the case of a portfolio policy. A portfolio policy being a policy where you have many locations that are covered on the same policy. So and these types of programs or policies can be dynamic. So the insured could be adding properties, it could be divesting properties. So there's a lot of activity in certain instances where you have to track the changes that are occurring. And there could be a case, and I've experienced this myself in the past, where a location is missed. And so that could cause a dispute to your carrier that's insuring, and may indicating that, for some particular reason, we weren't notified of a new acquisition, and we were late getting information to the carrier, or somehow it was missed. So in instances like that, the documentation is really your primary way of minimizing those kinds of issues by making sure you have good communication with the insured, and that communication is consistent with the carrier, so that locations aren't missed.
Yeah, that documentation is going to be absolutely vital. And I imagine, Cameron, it's particularly important at claims time as well, because claims can be such a grey area, can't they?
They can be. Yeah, no claim is really alike, especially pollution related claims. And while policy forms are broad and aim to address most claim scenarios, that's just not always the case. And so making sure that you have a broker partner who not only can utilize claim advocacy, but also utilize their own expertise, utilize their knowledge of the placement, utilize their knowledge of the insured and the event or the loss that occurred. These are all really important in defending your insured in the event of a claim, and making sure that any gray area associated with that claim is truly understood by the carrier. And in a lot of cases, that's resulted in millions of dollars coming back to our clients. Just having a broker partner that can advocate on their behalf in those gray areas. And then the last point I'll make with that is, a lot of times we find a lot of value in ensuring that our carrier partners are meeting our insureds. It adds a different level, or I would say an extra level of understanding of what the insured is doing, what they're performing, what loss control is actually being implemented. And in the event of a gray area, that introduction between a carrier partner and the insured can go a really long way in I guess, making that gray area a little bit more colorful and really leading to a claim payout.
And from a broker perspective, Cameron, as well, how do you look to maximize coverage levels for your insureds?
Yeah, well, maximizing coverage levels definitely takes, I would say, both a micro and macro level approach. And to answer this question, I'll take more of a macro level approach in stating that it's important for us as brokers to acknowledge and understand trends that may impact coverage in the future, whether that's economic trends, political trends, and everything kind of in between. It's our responsibility to understand who our clients are, what they do, and how changes in their particular industry may impact their insurance needs. And by understanding that, in a lot of ways, we can advocate for additional coverage line items, enhancements, or restructuring of certain language to ensure that that they're properly covered, especially in a very changing environment.
I guess, Kate, as well, it's always about thinking about setting your clients up for success.
Yeah, I think the way I recommend maximizing coverage for insureds is, when a claim happens is when sort of the rubber hits the road, and you want things to work the way that you've designed them to be. And so I think the best way to maximize that coverage is to communicate to insureds what are the best practices in having a claim, setting a claim up for success. What are the best practices to follow to make sure that you get the most successful outcome in that claim and you maximize the coverage under your policy? And so I think that starts with, at the moment of placement, we create a coverage or a claim reporting guide. It's got instructions in there on who to contact, how to report this, the things that are needed to include in your reporting, and then some of the other best practices with handling a claim, which is a lot of what we talked about earlier, which is timely reporting, making sure that that incident or that claim gets escalated up to the right person, and so that it gets timely into the carrier. A lot of times it's educating them up front as to what is a claim, even if it's something that it's an incident that happens, but not necessarily turned into a claim or a lawsuit yet. There's still, it makes a lot of sense just to go ahead and get that notice into the carrier, put a notice of incident in, or a notice of potential claim in, and just reserve your rights under that policy, get the carrier on board and let them know what happened. There's no downside to that. And then it's things like, maintaining documentation, make sure that they know what they've got to keep. There's all those technical reports, all those technical documents they need to keep. Make sure that they know that we can't really engage third-party vendors outside of emergency response vendors or attorneys before we really get the carrier on board with what's happening. I think all those sorts of things are best practices for making sure that a claim goes the best way possible so that they're maximizing the coverage under their policy. And so I think the broker plays a really big part in that, which is upfront, rather than being reactive when a claim happens and then trying to educate them on all the things. Let's be proactive and really set them up in the beginning to understand the expectations, what's going to be needed, and how the process is going to go, so that they have time to digest that and be prepared for it when and if that claim happens.
And when maximizing coverage levels as well, Ed, does benchmarking come into the equation?
Yeah, Paul, it certainly does. Yeah, benchmarking is something that we all do in our companies at different capacities, and it's really a good way to get information with regards to what other insureds are doing in that particular industry or risk type. So, and we have different capabilities in benchmarking. So, we look to do that to see what would be appropriate in terms of the best coverage and best deductible limits and so on. So, and that said, if we're limited in terms of that information, it could be a good idea to go to your more senior, seasoned colleagues within your organization to see if they've worked with similar risks to get some ideas of what would be the appropriate level of coverage to have.
Yeah, don't be afraid to get expert tips, as people are doing, hopefully, by watching this video, of course. Huge thanks to you all for your time. Remember, this panel will be back in Q3, but until then, to be matched with more expert insights, keep it right here at Insurance Business TV.